Hey guys, how you doing? What up, Beach Club? Welcome to the channel. This is David. I'm just going to do a quick little video update on my phone while I'm at work on my lunch break. So it's going to be quick and easy. I haven't even really taken a look at the chart. So we're going to do this we're just going to do this on the go here and see what we got going on, okay? So right now, Bitcoin. Actually, let's go back to the watch list. So right now, Bitcoin's down, ETH is down, XRP, Cardano, HBAR, DOT, pretty much everything but Matic is down, but it's already had its pop and should be working its way back down. The general crypto market is down. The crypto market, excluding Bitcoin, is down even more. And then the crypto market minus Bitcoin and Ethereum is actually outperforming the other two. So it looks like altcoins are slightly outperforming Bitcoin and Ethereum. Then you got your total DeFi space. Let's see stocks. The SPX is up today. SPX is up 1.34, 1.35%. Looks like there's some nice volatility in the stock market today. I don't have all the big ones on here yet. I need to add them. But as far as like the Apple and Google's and stuff, I do have them on another list, I believe, but we'll get it. It doesn't matter right now. What matters right now is the Dixie, which looks like it's starting to inch closer to being positive for the day. Of course, 55% of the Dixie is the euro, and it is having, let's back this up. Let's look at the daily, and it's having a positive day with some positive movement upward. We do have this vector candle zone down here to watch out for. And that 50 EMA could be a resistance as the euro comes in here. Now, if this hits resistance, and with it making up 55% of the dollar, if that hits resistance, then we could see the dollar start making its way back to the upside. Now, I did post on Twitter and in Discord how this could be possibly a dead cat bounce for the Dixie, which is something I think everybody in stocks and crypto and risk on assets in general would really, really, really love to see. We'd really love to see the Dixie come down. Now, there is a vector candle, at least on the daily, right up here between 113.68 and 114.06 that could be tapped. We could get that tap up there, and it could even push a little higher. So the question is, what's the likelihood of that? Let's go to the yield. Let's go check out the 10-year treasury bonds. Now, those did break 4%, which is a problem for Bitcoin and assets, because this shows that traders or investors are seeking safety in low appreciating or low yield assets. So what that means is that these typically don't move a whole lot, and so it is a way to hedge against the rising inflation. So we do need to see these yields roll over as well and start coming down. In order for that would give us the indication that traders, retail investors in general, institutional investors are starting to look to get back into risk on assets, such as crypto, stocks, and all that. So that's your U.S. 10-year treasury yields And then we have, so the Dixie could be coming up a little bit, maybe just short term, hopefully just short term. I do think, and I will be putting out a video where I believe at the bottom has been in, but I've been working on a theory for what we should expect moving forward that I really want to get into. So, but that's going to be a good video, a good a desktop video for you guys. Now, if we go to Bitcoin, yeah, we do have some vectors down below, but at the same time, we have a lot above us. And just as a general rule, let's go down to the 4 hour so we can see the VWAP more prominent, if it's even selected to be on, and it is. So as a general rule, let's just go down to a smaller time frame so we can see it better. So yeah, that orange line right there is the VWAP. This one right here, that's the VWAP. So what the VWAP is the volume weighted average price. So it's kind of like the fair price, maybe not even fair price, but it is the volume weighted average price. Basically kind of almost like, you know, a median of where price should be. So yeah, you could call it a fair value, I guess, but that's at about 19.5 right now, as Bitcoin has been falling today. But we have been creating these vector candles, so at some point they will need to be recovered. Now if I scroll down a little bit, it looks like we have shifted out of this downward trend, at least on the 1 hour. We've shifted down, so we came down and we shifted up out of it, came back down below it, shifting back above it again, and we're just kind of trying to slowly break this 800 EMA, the blue line here, and get these EMAs to get below the price action. So once that thing starts breaking up above and holding above the 800 EMA, that would look really nice. Now, we don't want it to just pop up like this and just bounce around and then you know, ultimately come down and come back underneath the 800 EMA. So we do want to see it come up. It's come down to the 200 EMA, tested it, it's testing it now, and hopefully it could hold and push higher. But if not, you know, we could still see another move down. But there's not even a vector candle until about 17.9 or 17.96. So that's what I'm looking at on that end. Our RSI, let's go to the higher time frames for the RSI. Let's go to the daily, see what we're looking like on that. So we did have, if I can zoom in here, so I believe, so right here, and you saw this big jump up, but we did have bullish divergence with price action relatively flat and kind of leaning towards the downside. Now that's not a strong angle, so it shouldn't be the strongest bullish divergence. And as you can see, it has had its limit. You know, it's kind of stalled a little bit, coming up on into that 50 EMA. Now if we can, like I said, if we can get above that and hold it, that would be a good sign. Cracking up above the 50 on the RSI and staying above it would be a good sign, as far as for the bullish scenario or the markup scenario. I do like what another YouTuber said, Tino over on Traders Reality. He doesn't like using the terms bullish and bearish because those are emotional terms. So He likes to use the, like, this is a markdown phase. This is a markup phase. This is a markdown phase. This is a markup phase. Like, they're either marking price up or they're marking price down. They're being market makers, the ones providing liquidity to the market. So I do believe the bottom is in, and this is really starting to look like a rounded bottom. And that's what I like to see. Now, they tried to push that price up. There was a big buy up here, shot the price up. Of course, they went ahead, took some profit, so price came back down. Test that area again, and just generally been holding this area for quite some time now. So that's good to see. I would like to see us get above that 50 EMA. And I think it's going to do it. I think it's going to do it eventually. I think it's going to come up maybe even a little later over here in December. And by that time, we're just going to range. But here's something that I wanted to point out. So a lot of people are pointing to this symmetrical triangle in here, which showed up on, the 2018 bear market, and it was right before the major capitulation. Now, I honestly don't believe that's going to happen. What I think, and the reason for that, a lot of people think that it just has to happen just because we've gone down 80-something% in a market, previous markets. But at the same time, we didn't have near the gains that we've had in previous markets. We didn't have the blow off top. We kind of had this weird double rounding top, but the top was really in April. That is when the true euphoria was there. With all your typical, laser hands, diamond hand, or laser eyes, diamond hands, and all that good jazz. HODL for life, never sell, all that BS. And then the day that Coinbase IPOs was the literal top. And then you had this massive flush real quick. Then institutions buy. And then they, guess what? They get another 50% or whatever it was. And then that's it. That's all she wrote. So I believe that the November top was actually our retracement. It was just like an excessive retracement. And it's mostly because we didn't have a blow off top like we usually do. It was almost kind of like a square, kind of like this. And then you have this square right here, which is where the price action was. And all they were doing was they were just distributing Bitcoin up here. They being the market makers. They were just distributing the Bitcoin in this area. And by distributing, I mean selling. They were just releasing it, but slowly. And also pushing price up here and there just to entice more people to buy. Because guess what? Liquidity providers, market makers can't sell their bags if they have no one to buy them. So they can't sell their bags if there's no one to sell to. So, and who is usually buying the top and buying premium prices? Well, that's retail. Or that's what retail usually does. So I don't know. And so, and another point that I wanted to make before I wrap this little video up is a lot of people think that a crash is what's needed for max pain. As a trader, I could tell you that personally, max pain for me would be this. Just an absolute slow grind that doesn't go anywhere for months on end until it finally has a little breakout, probably a little capitulation. Then we get into whatever you call it, the halving, and then that's when all the fireworks begin again. So that's going to be it for this video. Hopefully you can take something positive from it, learn from it. Let me know what you think in the comment section down below. Please like this video and also subscribe to the channel if you're new. And if you'd like to see this content and more content like it, that's obviously what you should do, is subscribe to the channel. And until I get my outro figured out, this is just going to continue to happen, and that is the amazing